In terms of what you saw over the course of the past year, COVID obviously taking its toll, commodity prices weaker, but are you buoyed for FY21 with a lot of that China demand coming back and I suppose a lot of infrastructure projects that could see a lift for commodity prices moving forward?
Look, absolutely. If you talk about FY20 performance, we were certainly impacted by commodity prices. But I would point out 3 of our operations had record production. 9 out of 10 of our operations reduced their operating costs. As we look forward, we are really already seeing China coming strongly out of their economic crisis as they recover from COVID-19, and other countries in the world starting to talk about stimulus and what growth looks like when you look at the PMIs. So we'd see the majority of our commodities heading more north in the second half of the calendar year.
So I wanted to talk a little bit about aluminium and alumina with you. This week we saw the Alunorte issues that they're having over there in Brazil. You actually said that you expect a little bit of a bump in terms of the alumina premium. But we've also got, coming up this year, Rio Tinto potentially shutting down their Tawai operations when it comes to aluminium. You've got a number of smelters on the chopping block. That can only be price positive for alumina and aluminium moving forward, right?
Yeah, look, in particular, the Alunorte issue, we've seen what's happened in the past when the world's largest refinery is under pressure. I would say, look, this one is slightly different because the duration is probably somewhere between the 2 to 3 months. So you're not talking about probably the same quantity of tonnage out of the market for an indefinite period of time. But at the same time, I think it will put some pressure on the price upwards in the next 0 to 3 months.
Now, you've also looked at getting out of that manganese smelter. Is this just part of a broader strategy you are to really refine the diversification in your portfolio in terms of also getting out of energy coal? Are you setting yourself up to now be a leaner, meaner operation, or is there any other kind of diversification that you're potentially looking at in terms of M&A?
Well, there's actually 2 sides of the portfolio we're working. One is to actually move the assets from the group that either have low returns or don't fit with our commodity preference, which really is thermal coal, and it is also the manganese alloy smelters. And taking those out of our business, for example, reduce about 35% of our workforce, increase our margins by 6%, and actually decrease our capital intensity by 25%. As well as the things we're taking out of the portfolio, we've been adding a series of options as well with the bias to base metals, particularly the Arizona project in Arizona, which is lead, silver and zinc, and also manganese oxide, and also looking at base metals project in Alaska with a joint venture called Ambler Metals, which is focusing on 2 deposits, Arctic and Bornite, as well as some metallurgical coal projects in Australia. So we are updating the portfolio in terms of moving low-returning assets, but also adding growth options to grow the company in the future. Because in particular, as we think about economic development in places like China and India, while COVID-19 has been, if you like, a hump in the road, we still believe that those commodities are going to be incredibly important in how those countries develop, and hence we continue to move our portfolio towards base metals.